We've been looking for signs that U.S. consumers are perhaps regaining their strength, and if today's bullish sales figures from retailers are any indication, the rebound may be in full swing. February figures out this morning are showing strong spending patterns, with consumer confidence also at a 3-year high. For insight, we're joined by Greg Melich, head of the consumer research team at ISI. He's been one of the top-ranked hardline analysts since 2005. Greg, welcome to InBusiness.
Hey, Margaret, great to be here.
You know, the headline actually is kind of surprising. I mean, is this a seasonal buying pattern, or is a hike in gas prices not impacting the consumer yet?
Well, fuel has a certain lag. If you look at our retail sales indicator, if you look at total energy bill, we find it's about a 3 to 6 month lead where people really start to change their spending behavior based on rising energy costs. So I think what we're seeing here, it was a pretty good February. The weather was pretty rough in January in the early part of the month. But total, we saw just over 4% growth. That is a little deceleration from January on a year-over-year basis, but better than what the market was fearing.
And when you look at the sales as reported by stores voluntarily here, same-store sales, how big of a sample is it truly, given so many have excluded themselves?
Yeah, you got to be careful on that. If you look at the guys that are reporting today, it's roughly 10% of U.S. retail sales that are reporting. So frankly, when the Census Bureau data comes out in about 10 days, we tend to focus more on that as a true read on the overall retail market, because that's more all-encompassing of retail. This tends to be very apparel heavy and dominant. So there's some trends that you see out of these chain store sales now that are different than you'll get when you get the bigger numbers in a week or so.
How might inflation be perhaps skewing the comps?
Well, certainly in apparel, inflation will start, although that's going to be something probably more in the second and third quarter. We think input costs could be up as high as 10% for a lot of guys, and they're going to try and pass it through. In food, if you look at CPI there, we have started to creep up, and most people that are selling food and grocery, you're seeing probably 100 bips of grocery inflation coming there. So that's part of, about 1%. So basically the deceleration that we were expecting this year is being mitigated a little bit from the comps, basically due to rising CPI.
Well, in reading your report here and looking at, you just talked about the lag time with gas prices. You broke it down as a 10% rise in fuel inflation cuts about 1.3% off retail sales in 6 months' time.
Right, and that's good. We look at fuel and utilities CPI as opposed to just gasoline, because it's more all-encompassing. It includes your electric bill, what you might be paying for home heating oil, and that really at the end of the day is the tax on the consumer. It's not just gasoline. Well, that makes a nice headline. There is no magic bullet. There is no number of $3.50 gas or $4 gas where people ultimately change their behavior. It's ultimately, does energy rise to 6-7% of consumer spending, where it really starts to weigh and create some demand destruction for consumers. We don't think 110 oil will do that, but we do think if we kept moving to say 130, that's where it would really start to impact, and that's where we'd have to reconsider our forecast of 3.5% U.S. retail sales growth this year. If we saw unemployment not get any better and home prices continue to just sort of stabilize and oil went to 130, we'd have to start cutting our numbers. We're not there yet, but that's what we'll be watching.
Well, the other thing that you're tracking is just the change in how the consumer buys, the way they do it. You talk about something called M-commerce, not just e-commerce.
Yeah, well, I think there's a dramatic shift, and we did several surveys, and we like to do a lot of those, and we did a piece a couple weeks ago that dived into the big change. And the big change is now that while 6% of U.S. retail sales are online, now about a third of America has a smartphone in their pocket. And what we found in our survey is that a quarter of those people have bought multiple items with their smartphone in the past year. So that means 8% of Americans have done that. As smartphone penetration goes to 50%, you're going to be seeing, we think, over 20% of Americans using their phone to buy stuff online. That's a dramatic acceleration, and it's why even in say the consumer electronics industry, we think it's a 5% growth industry this year. Right. But just the growth of Apple's retail stores and Amazon means that everybody else in the space is going to feel a down year. That's the sort of magnitude that we're seeing out there.
And I love the way you put that. You posed the question, is Best Buy selling the products that could render it? Absolutely.
There's the old Lennon quote, and I'm sure I'll get it wrong, but you sell the rope that they hang themselves with.
Right.
And the reality is Best Buy's doing great on that.
Back in a moment.
Yeah.